Good evening, everybody. You realize tomorrow is already October 1st? Okay, smokes. It's later now than it's ever been before. All right, I'm pulling up the Dow chart in this case to show you what the nature of the market has been. After a trend, it moves sideways for 3 or 4 weeks. Then a trend, then moves sideways. This is more choppy right here. Trend, now we're kind of moving sideways again. So there's this lots of hesitation in the markets. So it's making these stages here very difficult to trade. That means there's only one last criteria that kind of holds you into a position, and that's the T-line. NASDAQ, not so much. You can see, but this stage right here was relatively weak. But you can see there's more definition of trends on the NASDAQ. And I don't know what more so on the SPY. So, but it's still the same criteria. If you're below the T-line, you're in a downtrend. Choppy, uptrend. Now we're in a downtrend, and we're still below the T-line, even with all the bullish trading today. Still making it difficult to really latch on to anything overtly long. So the shorts, because of the simple T-line rule, the trend is down until we see a buy signal and a close above the T-line. So we're in as many shorts as we are long, although when we recommended HEP, Hewlett-Packard, it was based upon this J-hook pattern. And we also recommended Hillenbrand because of this pattern setup. Now, if you bought it on the positive trading today, gives you one criteria. It has to open positive and trade positive to stay in it. If it opens lower and trades lower, it changes this from being a prospective J-hook type pattern more into a drifting trend. So the ones that kind of make the argument for staying with the pattern setups is this VC. We recommended this one on the basis of that belt hold, which would start producing this J-hook. Where do you think the next likely target is? Probably back up to the top of this trend. So let's see, what is that? Another J-hook pattern, again with convergence analysis. Convergence analysis is we can see the strong signal, the best friend signal, and we can see that it occurred right smack dab off the 50-day moving average, starting with a doji Harami. Just the fact that you have a doji Harami tells you if it opens positive, it's supporting at the 50. The fact that they gapped up, doing a best friend signal and closing above the T-line tells you there's a good prospect that if this is wave 1, wave 3 is going to bring you up into this range. Again, utilizing the information that we know creates very strong signals and patterns based upon the results of human nature for the past 400 years. Senta, still staying above the T-line after the bobble breakout. Just going to go through the ones we've been in. Staying with this one as long as it stays above the T-line. Again, notice your belt hold was the instigator of the next price move. Now on the short side, we've been short this one because of the obvious failure at the 200 with your bearish best friend closed below the T-line. And how long do you stay short on this one? As long as you don't see a sell or a buy signal to close back up above the T-line. This one we put spreads on, which expire this Friday. Not huge profits unless they start breaking it down big over the next couple of days. But that's all going to be a function of which way are they going to take this market. Again, our probabilities say, well, first of all, sideways trend, nothing reversing that, and we're still trading at or below the T-line in the markets. Some of the other shorts that are working, TME. Once again, a failure at the 50 with a left-right combo, closed below the T-line, followed by a bearish doji sandwich. And what's the overall trend of this stock? Pretty much big downward trend channel. APLS, same scenario, big gap down. And then notice what they did. A doji that told us they were going to move in that direction. When they started selling off the next day, what did that tell us? They weren't buying yet. You could be shorting this one. ENPH, yeah, your left-right combo, morning star or evening star signal, bearish doji sandwich. We're looking for it to break this level, because if it breaks this level, what pattern do we have setting up? We've got a blue ice failure, making this another target. Hello, Pat. How are you tonight? SPWR, bearish engulfing, bearish doji sandwich, more downside. Where's your likely target? 200-day moving average. Wayfair, another one that we bought puts on because it failed at the 200, closed below the T-line. Where's our first likely target? Right here. Where's our next likely target? Don't think it's going to get all the way down there, but I bet you there's a bunch of people that didn't think it'd go from 150 down here to 106. They do SMAR. SMAR, we're staying short. Again, a bearish J-hook pattern. And look what we've got here right now. A doji, if it opens lower tomorrow, what do we got going on? A bearish doji sandwich. Telling us wave 1, wave 2, wave 3 is in progress. And Planet Fitness, left-right combo, gap down. How long do you stay short? Until you see a buy signal and a close back up above the T-line. Now, there's many times where got good profits. You see a bullish Harame, they open up positive the next day, trade it positive, you close out the position. And then you can re-short the position because of what happened here. Make this big enough where we can see it. They closed back below the halfway point of the candle that told us the bulls might be taking control. Now what do we have going on? Wave 1, wave 2, wave 3 to the downside. So again, this is not rocket science. This is just kind of analyzing what we know happens. Look at the failure at the 50. Where do we think the next likely target was? Another one that you could pretty much draw. Ran right down through there. That would be a likely target. And where would your stochastics be when it got there? Got back down to the oversold condition. Tesla, sold off today, but came right back up. You still have a kind of a scoop type morning star signal. You can still be considering buying Tesla on positive trading from here. As long as I'd want to see it break out kind of through this little resistance level, making the target the 200-day moving average. Facebook tried to bounce back up today, getting very close to the 200-day moving average. Still looking for some more downside on this one. Why? Because our stochastics aren't quite in the oversold area yet. Amazon tried to do a bullish Harami hammer. Still needs confirmation. Kind of broke this support level. Now, if it pops back up, it means they're probably at least bouncing back up toward the T-line. Labo is another breakdown. Shooting star, Doji, bearish confirmation. How long do you stay short here? Until you see a buy signal and a close, probably a buy signal now that you're getting this far away from the T-line. A couple of the other ones that aren't really doing anything great. Netflix, sideways. NVIDIA, bullish Harami after hitting the 50. Let's see if it can break back up through this level. TW, yes. There are times when the probabilities start going against you. Not quite in the oversold area, but I'd still watch. I'd have my stop just above today's high. If they bounce it back up in this direction, that means they're at least taking it probably back up to the T-line as a bounce, which won't be as high tomorrow. It'll probably be more down in this area. But it tells you there's some buying coming in here. Will it last? We don't know. So if you see a Doji in the oversold area or getting to the oversold area, Doji Harami, and it opens positive, that's exactly what the confirmation is on for a Harami, is that it's telling you the selling has stopped. Now, we were going to go short, or we did buy puts this morning on Daku, because you got an evening star signal closed below the T-line. Left-right combo closed below the T-line. Today it came right back up and closed right at the T-line. We closed out the position. Why? Well, even though it hasn't closed below the T-line, we don't know if it's going to pop this way or go this way or this way from this point. So anytime you close or have a situation where it's not moving the way you expected it, that it could still go down, but that's still a probability of not knowing which way they might open it tomorrow, which way it's going to go. So I was explaining to the options room today that if you've got something like this and you don't know what it's doing, close it out. There's too many other positions out there that have great downside potential, or potential one way or the other. For example, we've recommended overstock for a short, because if it opens lower tomorrow, what do we got going on? Bearish J-hook pattern. And ATHM, another rollover, and now they're starting to sell it off. Now, here is a very good entry strategy. If you see something that has created a sell signal, look at kind of our little double doji failure here at the T-line, then they open up positive. Very simple. You put, if you're going to go short, you put your stop right here where it closed the previous day. Because if it comes down through that level, what's it telling us? The bears are still pushing this one down. So it becomes a very easy to identify, an easy to execute entry point on a short position. All right, some of the other positions out there, we recommended a buy on Reggie. You can see the classic fry pan bottom J-hook pattern coming off a morning star signal, left-right combo, close above the T-line, where do you think the next likely target could be? If this is wave 1, wave 3 would be up here at the 200-day moving average. Valero, nice J-hook pattern, also at the point of the breakout area. Wave 1, wave 2, notice what started wave 3. Your doji, little gap up best friend, break out of this little wedge type formation, as well as creating this slow curve or rounding curve setup. Let's see. And Papa John's, another one. There's your bullish engulfing, left-right combo, scoop type pattern. This one could have another wave to the upside. So now, as you can see, the price magnitude isn't all that great, but it becomes a very high probability trade setup for an option trade. But if you can calculate, this is wave 1, wave 3 might be right up in here. So you might you might buy something like the 53 and sell the 56, all depending on which ones make the most sense. Oh, Facebook, as far as calls, not yet. You still don't have a confirmed buy signal. We're still holding a put spread with the anticipation they will come down and test the 200. Now, we do have a bullish Doji Harami, which means if they bring this back up through today's high, yeah, we'll cover the short position at that point. Because what do we expect from a Doji Harami? Definitely telling you that there's possibility of selling his stop. Newell had broken out nicely, but notice again, this was a doji gap up through the resistance level. It could do a bearish doji sandwich if you're talking about Facebook. But remember, if you get a bearish doji sandwich with this magnitude, that means you're probably going to try to get down through the 200. Okay, see, Newell, SRCL, another classic, fry pan bottom, J-hook pattern off your dojis. Do we need confirmation before taking trades at the top? What do you mean taking trades at the top? Yeah, very rarely do you want to be buying at the top unless it's some sort of pattern breakout or a breakout of a resistance level. CVS, possibility. Again, we're watching, or we want to watch to see what this little downtrend, we want to breach that to tell you you've broken that little resistance level. And handwriting is this. SNER. Oh, like when you see, yeah, you want to see the, yeah, you can short the sell signals or close out long positions if you see a sell signal at the top. So SNBR, you can see the hammer, the inverted hammer. You can be buying this one with the expectation it's probably coming back up to the top of the channel. If you like trading channels, because at least you can calculate where your upside potential is. Dropbox sitting right here at a potential bobble breakout area. You can keep an eye on this one. And the reason we're showing Urban Outfitters is kind of explain this in the chat room today. Notice you can see the definite slow curve, but look where they gapped it up. If they're gapping it up, knowing that there's a resistance level right here, whether it's this level and or the 200, if they're gapping up to get there, they're not gapping up to go right to a resistance level. More than likely, they're going to go through, which means now you've completed that pattern. And where's your next target? Somewhere at the top of this uptrend. Fossil, again, left-to-right combo, doji. These are the ones that if you're even trading options on some of these, provided the volume is big enough, you know that if it opens positive, you can be buying right away with a high, that the magnitude of the move will be at least like this. That's it. These are good, perfect day trade setups for option trading or even stock trading. Another bobble breakout type situation where if they can get Ralph Lauren up through the 50, now you're in wave 3. EMR, wave 1, wave 2, starting wave 3, same scenario. If they open positive, doing a doji sandwich, breaking out through this level, tells you wave 3, you got a high probability that you're that you've got a good, even a day trade type setup. What was that? EMR. All right. And LYB, another, essentially a day hook pattern breakout about ready to occur. Another one that I'd be ready to do some calls or call spreads, even with the market kind of is, what did I do wrong? Well. No, it's not going to come up. SPG was a good short with your left-right combo gap down. You hit your piercing signal. That was the time to start looking to take profits. Now you've got that same setup, but if this opens positive after a big bullish move through the T-line and the 50, and notice how it used the T-line as support today, that if we get a positive open tomorrow, you've got a good chance that you're going to be looking at a bullish doji sandwich. CASA, the same scenario. A positive open tomorrow, essentially putting you through the resistance level, giving you another possible day like this, or confirming your J-hook pattern. That would kind of make your target back up to the 200-day moving average. So we did that one. Now on the short side, again, this is why we've been recommending having short positions in the portfolio as the market got a little bit toppy over the last couple of weeks. Is we'll start looking for things that might be turning over. Again, Bowen had your left-right combo in a lower open. If this opens lower, where do you think your next likely target probably is? Somewhere in this range. FDP, kind of a big column reversal. Also has the prospects of coming back down here or even down to the 50-day moving average. Zine. Here's one that, again, with that doji gap down, now you've had this flat trading area. If they come down through this range, you've got a wave 1, wave 2, going into wave 3. You can be shorting this one. You can be shorting this one. Notice how once they came down through the T-line, they used the T-line as resistance, use the T-line as resistance, use the shooting star that brought you back down. You can be shorting this one with the anticipation that somewhere down in this range is your first likely target. This Blackstone, doji, inverted or hanging man, bearish confirmation. This is where they've pulled the plug. Another one that probably has the prospects of coming all the way back down here, and or could go all the way down to the 50. So there's still plenty of good trades. Whoops. Get rid of those. Plenty of good trade setups, especially if this opens lower. This is AVLR. That magnitude candle would take you where? Probably right down to the 200-day moving average. And ramp, same scenario. You can see the failure here at the 50 with the indecisive trading. If this opens lower, another prospect of a big selling day to the downside. We were going to buy ZS on that same basis. Still becomes a viable trade. If this opens lower tomorrow, which means breaking out through this level, putting you into wave 3, high probabilities you got more downside. So even though this market is not showing us any great direction one way or the other, you still have a good number of high probability trades. And right now, we're holding on to positions that are staying short, like Wayfair, Planet Fitness, unless it does a reversal, Children's Palace, unless it does a reversal. So there's lots of positions that we got into just because we had the protection thought process that with the market getting up to where we really couldn't tell which direction it wanted to go, if we had both longs and shorts, a lot of the shorts have now been stopped out, but the longs, because the market is still in a slow drift to the downside, has given us some good profitability in that direction. All right, so we've got things like crude oil that's still kind of stuck in this range. We've got wheat that's doing a J-hook type pattern. Don't know what soybeans is doing. Popped back up, more than likely going to the 200. Trying to think of anything else. Oh, gold. Gold gotten hit pretty hard. So the fact that you weren't able to hold it here at the 50, which was kind of a support level, makes maybe this target, or this level your next likely target. Silver, the same scenario. Look at your big evening star signal up here. So there's still some good trades out there. There's things that you just have to be kind of a little bit more nimble based upon how the market opens tomorrow. So you see the pre-market futures down and see something like this, at least you know you have a viable short position or put trade based upon knowing that a doji sandwich is likely to set up. Okay, are there any general questions on candlesticks? If not, Jim, go ahead and do the double line. And now in 2.8 seconds, do the next double line. CNX, that one has a piercing signal. If you were short this one, I would have covered it, but I wouldn't be going long until you can get through the moving averages, especially the T-line. And since you're so close to the T-line and the 50, I'd want to get through both of those. Marathon, bullish engulfing, another one that if I was short, I would have closed out the short position, but I wouldn't be going long just yet. Apple had the strongest move today because of somebody upgraded it. Now remember, you got to be a little bit more cautious on an upgrade, because an upgrade usually means that's just a temporary change of supply and demand. So if you're buying this one on strength tomorrow, got to be a little bit more cautious that once the buying strength of that upgrade dissipates, you got to see what the rest of the market is going to do with that price move from there. That was Apple. ERFT. Slow, steady uptrend. You can be buying this one. I'd rather hold this one instead of be buying it. Just kind of a slow, steady uptrend. Trex, that one I'd be more apt to buy on positive trading, giving you that slow curve breakout. You graduated? Okay. HIIQ. Good chart. Notice the one compelling aspect of this uptrend. You do not or have not seen anything close below the T-line. So yes, you can stay long. I'd be more apt to be staying long than going long at this point. But if you like it, you can be buying it. Just be a little bit more attentive. And then the bonds are still trading higher, not real with any great enthusiasm, but again, the bonds aren't going to move around all that much. You can stay long on this one. IAG, stay short. Just be careful at the 200, because you can kind of see there's a trend channel in here. SCCO. Nothing yet. I wouldn't be long. I wouldn't be short. I'd want to see a breakout one way or the other. And the reason it's not compelling just yet is just the stochastics aren't anywhere to tell you you've got any great probability of moving one way or the other. MAS, this one you can be buying on positive trading. You can see the slow trajectory uptrend, making somewhere up here your next likely target, up in this range. And PBF, just stay long. You can see the bobble breakout. I would suspect they're going to come back up here eventually to the 200-day moving average. Workhorse, slow. If you're long, you stay long. Just have your safety stop below the T-line. Notice how you're already running out of steam on your stochastics. So you don't have as much energy on this one right now. Alta, you can stay long on this fry pan bottom. Looking for this level right here as a breakout giving you a lot of running room. First target, second target, third target. Uh-oh. Something's happening there. That one's not coming up. Are you meaning UNH? Bullish Harami. If you're short, you get ready to cover it on positive trading tomorrow. See, we did GBT, right? Stay short. I would have a safety stop at today's open. And where's my Twitter? Another one that if this opens lower tomorrow, you got a bearish doji sandwich confirming the downtrend. All right. Whoops, didn't scroll fast enough. Oh, boy. If you like this one, you can be buying it with the expectation it's going to come back up to this level and maybe this level. So you've got a bullish engulfing signal. If you're buying on positive trading tomorrow, you don't want to see it come back and close back below the T-line. PDCO, another one that you can be buying on positive trading tomorrow, giving you a bobble breakout with kind of a doji sandwich move. Square was in a steady uptrend. You can stay long with the anticipation they're eventually heading for the 50. Oops. Gotta make this big enough to... Nothing there, Jamal. I'd be someplace else. There's a nice little slow curve on Walgreens. You won't make a heck of a lot of money with this, but it's moving in the right direction. And SNA Snap-on. If you're thinking about buying this one, I'd be more apt to buy it above today's high, telling you that it broke out through the 200, confirming this little slow curve. Notice all the dojis, except for your reversal area right here. SPWR, stay short. If you're short, I'd just have my safety stop here at today's open. The reason for that is look how far away you're starting to move from the T-line. And pause if you're short. Yeah, stay short. Looking for this trajectory, which kind of coincides with heading down to the 200-day moving average. SGEN had a nice big gap up today. I would suspect a 45 degree to come off of here. When they start gapping it up, was this that was your bullish flutter kicker type setup. So if you got long, it needs to open positive. And look for at least a 45 degree. Whirlpool, just stay long. Nice J-hook pattern in progress. Go. Very doji sandwich. If there's enough volume on this one, you can be shorting it. And this is a good area to say, all right, where can it pull back to? Well, it could pull back to here, or this is a good time where you put your Fibonacci retracements on. So it could pull back to here, or here. So Not that you're trading Fibonacci, you just want to see where it might support, which means that's where everybody else is watching to see where it was going to support. And the Russell tried to do a doji here, but your stochastic's still not in the oversold area yet. Still have to watch to see if it's going to trade lower and or kind of wobble around in here for a couple of days, giving your stochastics time to get to the oversold area. Oops, there's more. We did Apple. Oracle, you can be buying this one. You won't make a heck of a lot of money with it, but you will, it will be moving in the right direction. And WBO, not coming up. INGR. That one you can get ready to buy. Wave 1, Wave 3, good prospect of coming up to the 200-day moving average. EXPR. I would stay long. Watch to see what it does once it gets to the, if it opens positive, watch to see what happens when you get to the 200. When I say watch to see what happens, see what type of signals or formations it creates at that level. Stay long on this one. Could be a steady eddy. ENPH, we're short this one. If this opens lower, giving you another bearish doji sandwich, trying to break this area, still looking for a wave 1, wave 2, blue ice failure, wave 3 down to that level. Ball. Yeah, try to refresh. Guess he can't hear me if he can't hear me. Okay, RRD. You can get ready to buy this one. It's trying to do a bobble breakout. And notice what it did today. Use the T-line again as support. INTC Intel, another one that's got a good pattern to it. Not a big percentage mover because it's an institutional trader, but it's definitely moving in the right direction. So I would suspect this would be your first target. If it breaks through there, that's the magnitude of your next move. Winnebago. We recommended this one for positive on a positive open tomorrow. The Russell, I think we did a doji here. It needs to show bullish confirmation. But I would suspect with stochastic still in this area, you might have a day or two of waffling before they can get it moving. Bank of America, I wouldn't go short. No, I would suspect it's going to be at least trading in here. That's not a big enough move to go short right now. Okay, just be aware that we're kind of in a sideways market. And the fact that they closed this back below the T-line today is a little bit concerning. Not concerning, it's kind of pretty evident that they don't have enough bullish strength yet to really break this out to the upside. So still sideways. Tesla still can be bought if it can break this kind of little downtrending channel. After selling off today, it came back up. Okay, we're done early tonight. So we'll see everybody bright and early in the chat room tomorrow. I'll try to come in early just to see what the pre-market futures are doing and which trades that you might want to go after quickly. All right, we'll see you then.